Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics and a quick video today because we have some news out from Fortuna Mining as they just released their second quarter financial results after the close yesterday. So I wanted to walk you through the highlights, and we will start with a comment from Jorge Ganoza, the CEO of Fortuna, who mentions that the second quarter allowed Fortuna to complete the quarter with liquidity of more than $500 million, which has allowed them to strengthen their balance sheet to pursue growth opportunities, including the production expansion at Seguela and also advancing to a construction decision at their Diamba Sud project by the first half of 2026. And they are also looking at completing a PEA there later this year. And as you may have seen yesterday, they also did release a new mineral resource update where they talk more about that PEA that is targeted for completion in the fourth quarter. And obviously, we're almost midway through the third quarter, believe that, and which means that will not be far off. So, a lot of news to be coming out of Fortuna before the year is done. Although, here we have a total of 75,950 gold equivalent ounces, which keeps them on track to meet their annual guidance production. Obviously, they had the higher realized gold price in the third quarter, which gave them a record EBITDA margin of 55%. They did also have a higher all-in sustaining cost, which was driven by the capital expenditures and peak mine waste stripping at Seguela, which is part of the plans to allow them to achieve that increased production range, which they are targeting 160 to 180,000 ounces of gold there at in 2026. And taking a look at the cash flow, we see free cash flow from ongoing operations of 57.4 million and net cash from operating activities before working capital charges of 96.9 million or 32 cents per share. The liquidity, which I mentioned briefly above, came in at 537.3 million. And then as we look down here, attributable net income from continuing operations of 42.6 million or 14 cents per share, which was an increase quarter over quarter of 3 cents per share. And the attributable adjusted net income was 44.7 million or 15 cents per share, which was a 4% increase relative to the prior quarter. And they had gold equivalent production of 71,229 ounces from the continuing operations, and the total gold equivalent ounce production, when you include the discontinued, came in at just under 76,000. All-in sustaining cost, as I mentioned, up to 1932. And again, here they have a note about the updated mineral resource estimate at Diamba Sud, which I mentioned a moment ago, came in with an indicated mineral resource of 724,000 gold ounces and an inferred mineral resource of 285,000 gold ounces. Here is the note about Yaramoko and San Jose, where they received 83.8 million in gross proceeds related to the divestment of those two short life mines. And again, that was the main reason that they sold Yaramoko and wound down San Jose, because it was running out of the life of mine, and they wanted to take that capital and allocate it to higher value projects, which here you see that gives them approximately 50 million to focus away from mine closures and towards higher value opportunities that will be a better fit. Because as you may have heard, one of the things Jorge has talked quite about is not just boosting the overall production, but doing that with lower cost ounces. So again, I'll also add that they are doing their company conference call at noon Eastern today. And Jorge will be joining us here on the show next Tuesday at 2 p.m. Eastern. So, two places to get any questions answered if you are looking through the results here and anything you wanted to get in touch with management for. And of course, you can always go through the contact tab here. And I know there are some, actually quite proud to know that a lot of the good people at Fortuna. So I know they will be happy to get you any answers there. Now, in terms of the individual mines here at Seguela, you can see mine production totaled 340,000 tons of ore at 3.3 grams per ton, which contain an estimated 36,482 ounces of gold from the Antenna, Ancien, and Kula pits. Movement of waste during the quarter was 5.2 million tons at a strip ratio of 15.3 to 1. In the second quarter, they processed 429,184 tons of ore, which produced 38,186 ounces of gold at an average head grade of 3 grams per ton. And the all-in sustaining cost at Seguela came in at 1634. That was higher than the 2024 number, which was the result of higher cash costs, higher sustaining capital from higher capitalized stripping, and higher sustaining leases, as well as the advancement of the Stage 3 tailings lift to support that higher production at Seguela. Over at Lindero, we can see a total of 1.8 million tons of ore were placed on the heap leach pad at an average grade of 0.57 grams per ton for an estimated 33,219 ounces of gold. 1.3 million tons of ore were mined at a strip ratio of 2.3 to 1. In terms of the actual production, that came in at 23,550 ounces. And the all-in sustaining cost at the quarter there was 1783, which was about $150 lower than the same quarter last year. And that was due primarily to the expenditures that they put into the leach pad expansion program, which we talked quite a bit about last year and has helped them to increase their production and is also now complete. Then also we look over at Kioma, where they produced 240,621 ounces of silver at an average head grade of 64 grams per ton. Lead production, 8.9 million pounds. Zinc came in at 12.9 million pounds. And the all in sustaining cost there was $21.73. Obviously, with the silver price moving a bit higher, I suppose some of that move was really the last part was in the third quarter. So they'll benefit from that in this upcoming quarter. But even before that, we did see the elevated silver price, which also benefited the operations at Kioma. So again, there will be a conference call through the Fortuna site at noon Eastern, and the link to that is in the description field below. And like I mentioned, we will also be having Jorge join us on the show next Tuesday. Although just in wrapping up, in case you missed the news that came out a day ago about the updated mineral resource estimate, well, I did make a video that walks through the highlights of that. That one's coming your way now.